Poised for Exit is a show for business owners who want to achieve a successful exit based on their own terms. Your business exit will likely be the biggest financial transaction of your life, and for most, you'll have one shot at doing it right. The topics and guests we feature and the stories they share will provide valuable ideas and strategies to improve operations and grow enterprise value so you can achieve the best possible exit outcome. Now here's your host, award-winning certified exit planning advisor, Julie Keys.
Hello, everybody. Welcome to Poised for Exit, the exit planning podcast show. Our guest today is the president and CEO of a business brokerage firm who's been working with buyers and sellers for over 100 years. We're going to talk with him right after these messages.
This is Andy Kocemba, president of Calhoun Companies. We understand that selling your business is a big deal. Since 1908, Calhoun Companies has been confidently connecting buyers and sellers. From small family shops to large corporations, our expert brokers walk with you and guide you every step of the way, whether you're looking to retire or simply for a fresh start. If you're curious what your business could sell for, or if you're ready to start the process, head to calhouncompanies.com for a free and confidential consultation. Calhoun Companies, the confident choice for buyers and sellers.
My name is Todd Crow, and I'm the president of the Twin Cities Exit Planning Chapter. If you're a business owner and advisor and want to learn more about the world of exit planning, you're invited to visit the Twin Cities chapter of the Exit Planning Institute. You can expect top-level education delivered by subject matter experts at every monthly meeting. Grow your network and draw from the learning that could be a game changer for your business or your practice. There's no pressure to become a member, so come and see what the buzz is all about. Our meetings are held the second Wednesday of the month, 7:30 to 9 a.m. See the show notes for more information and registration links.
Exiting your business is a big deal, both financially and emotionally. I'm John Marquet, Certified Exit Planning Advisor with TrustPoint. We help business owners transition smoothly on their terms. Our focus is on maximizing value, minimizing stress, and giving you confidence in what's next. Whether you're selling or passing the torch, we make the process seamless. Start planning today at trustpointinc.com. That's trustpointinc.com.
Thinking about selling your business in the next few years? Don't wait to start planning. I've seen too many business owners wait too long and regret it. Freedom Financial Partners are financial advisors who specialize in exit planning for business owners, helping you reduce tax surprises, protect what you've built, and quantify how much you need from the sale. Their proven process helps you think beyond your business so you can move forward with clarity and confidence. The longer you wait, the fewer options you may have. Download your free financial readiness assessment today at ffpforme.com/exit. That's ffpforme.com/exit. Hello, Poised for Exit listeners. We are here today with Andy Kocemba, who is the president and CEO of Calhoun Companies in Minneapolis. Andy, welcome back to Poised for Exit.
Thank you. Glad to be here.
So happy that you are. And it's great to have you on the show. Not only that, but great to have you as a sponsor for 2026.
Yes, it's an honor. Thank you.
Thank you for joining us. So we're here to talk about business brokerage in 2026, what the market's going to look like, maybe an overview of what you're hearing from business owners, lots of different things like that. We're going to get into deal structure today. We're going to talk about preparation. So let's just start with your kind of window on the new year and what you're expecting for the company.
Yes, no, good question. I think I always like to answer that in terms of, there's current events and things that are new, and certainly the buzzword I'd say for this year, it seems to be turmoil already a little bit.
Yeah.
Cultural, political, economic. Yet at the same time, I always say the more things change, the more they stay the same.
Yeah.
And we'll touch on that with probably every question you ask me here today. It's not to say turmoil is even bad. Things are just a little more up in the air. And I'm still, with all that said, expecting a very good year in our business, because there's always, regardless of circumstances, there are business owners who maintain clarity about what they do, they adapt properly, and they're able to stay focused through all the noise. And those are the ones that thrive and they're successful. And there will always be those. Conversely, there will always be those that can't do those things. Like I said, turmoil seems to be the buzzword right now, at least in my head, yet I don't see that necessarily as an indicator of, boy, it's going to be a tough year. we're just always looking for those folks that rise above it and trying to help people do that as best we can.
Yeah, and I think that you kind of described humanity as a whole, right?
Right.
Yeah.
Exactly.
Yeah, some of us are like cats and we land on our feet no matter how we're thrown.
Right.
And,
Exactly.
and
Exactly.
business owners tend to fall into that category, being the resilient
Mm-hmm.
people that they are, right?
Because they have to, right?
Because they have to.
Yep.
Exactly. Exactly. So let's talk about preparation. One of the things that you said when we were planning the show was that you believe preparation is really more important than timing. And I couldn't agree more.
Yeah.
So let's talk about that.
Preparation more than timing. So a lot of times people will come to us and ask if it's the right year to sell, thinking more from a timing perspective. Almost like people think about stocks, buy low, sell high, time the market.
Sure.
And I don't see our world that way. To your point, preparation is more important than timing. Being ready to hit the market in a way that sets your business apart from others. Again, the more things change, the more they stay the same. People always ask about multiples, for example, valuation models. Are multiples increasing or decreasing? I found that through the years, multiples don't change dramatically.
Sure.
But what does change is the business's performance, their
Yes.
again, their preparation, how they're set up, how they're established.
That is so true, Andy. Yes, thank you for bringing that up. Sorry, I didn't mean to interrupt you.
No,
Yeah, I just wanted to underline that because I get the same questions as an exit planner from business owners trying to prepare. Well, what kind of multiple do you think I'm going to get? And my answer is, okay, well, for your industry, there's going to be a range, right, of multiples, and you're going to fall in somewhere within that range, depending on, like you said, the performance of the business.
yeah, and that's again kind of like what I said previously about turmoil. It's those sellers who are the good operators. They're prepared. They've got established systems, processes. The number one impact to your value is going to be cash flow, not the multiple. So the more you can do to keep your business solid and performing, like I said, multiples are pretty consistent over time, regardless of the year and the calendar.
Mhm.
So that's where the preparation is always the more important factor.
When it comes to cash flow, I was speaking at an event last week and that topic came up and I asked the CPA who was on the panel, tell me about how cash flow is impacting or will impact valuation. So maybe you could speak to that from your expertise.
Well, it's, as I just said, the number one factor. When you're simple valuation, you're taking a multiple of the earnings. The earnings are
Mhm.
the cash flow. And so you could try to impact that multiplier, whether it's 2 times or 3 times or 4 times. But at the same time, the way I always say to get the best price for your business is make sure that cash flow is high. 3 times a million is better than 3 times 500,000 by a lot. So,
Of course.
yeah.
What about the ones that are fluctuating though, like when it's not very consistent?
And that's a good question. And that's where you have to dig a little bit deeper into, is this a regular seasonality or regular fluctuations? Of course,
Sure.
bankers will look at that to see about stability. And some businesses just do have that year to year. Others, it is indicative of more of a trend for good or bad,
Yeah.
a direction of where the business is headed. So through due
Mhm.
diligence with a good broker, bankers, they'll look and analyze and try and get to the bottom of that.
I was thinking of one particular company that I talked to recently who has one salesperson, and that salesperson is a shareholder, and that salesperson wants to retire, and no one else in the company does any selling. And oh, by the way, they have maybe 70% of their business comes from one customer. And so there's some risk there. And I've seen situations similar to that in other companies, even bigger companies, where either the owners are the primary salespeople or they've got key people that are moving on and have all the relationships. So just
Right.
for the listeners, when we think about things like that, everybody's thinking about what they can do to improve the value of their business. Well, that's one way to do it, right?
Absolutely.
Yeah. Let's talk about deal structure. I'm very interested in hearing what you have to say about that. I think that many of our listeners out there from all over the country and even in different parts of the world, they're all especially the smaller companies, right? They're all going to need to understand how this works. And then from there, maybe decide what works for them and what doesn't and make changes if they need to.
Yeah. No, it's a good question. And I think because people like to research and find information and do learning ahead of time. And I think one of the problems with that is sometimes people tend to try to get creative with deal structure before they even have a deal on the table.
Mhm.
I think high level, the less complex a deal structure, the better. So you always want to start simple. And then if needed, you get more complicated to try and make the deal work. Because at its core, a buyer is paying money to buy a business from a seller.
Mhm.
Simplest is here's some cash, I'll take it, and then you get more complicated from there with seller carry or earnouts or things like that. But really, what it boils down to is deal structure is about give and take needed for both parties to trust in the successful transition of the business. And we always say that at Calhoun that deal making always comes down to trust. The seller
Mhm.
has to trust that the buyer is going to pay, that the buyer is going to maintain their legacy, take care of their people. While at the same time, the buyer needs to trust that this is a legitimate business, that it's well established, that there's systems and processes in place. And the more that trust can be established from the beginning, the less you need complicated deal structures. Now, with some businesses, there may be question as to single customers or concentration issues or production or things like that. So maybe you have to get a little more if this then this or if this then this, and that's really what deal structure is about is
Sure.
making sure it works going forward for both parties. To circle back to our topic of preparation, the more prepared a seller is, the more that they are conveying a trustworthy business, the more they're earning that trust right off the bat, the less they're going to need to give in terms of structure when it comes to the deal making process. They'll be able to
Good point.
get more money at closing is really what it all comes down to. Cash at closing, the more you can get, the better
Mhm.
the situation is, generally speaking.
Yeah, so for instance, if I am a seller or will be a seller in the future, and I've decided that it's important for me to make sure that my financials are accurate, that my books are clean, I'm going to spend some money with an accountant. They're going to conduct an audit or maybe not quite that robust, but something like that, a review or a compilation, so that I can prove that I had an outside firm look everything over and tell me that everything was in order, right? And made sense,
Right.
tells a story.
Yep.
If I did that, then that would maybe be a feather in the cap of trust.
Correct.
Hmm.
Yep. Yep. And also, to the point you made earlier about, single salesperson, high customer concentration, all of that weakens not trust in the seller and what they're saying, but trust in the business going forward.
Right.
A buyer is left going, this could work or it could not. And the more you alleviate that question in the buyer's mind, the more you are likely to get an advantageous deal structure. Yeah.
So with the companies that are planning to go to market in 26 or maybe are already on the market, how is there a way for you to look into your crystal ball and make a prediction on how many of them will become like bolt-ons or roll-ups if they're smaller for larger acquisitions where it's strategic? Not acquisitions, but companies that are looking
Yeah.
for, yeah.
So I guess I'd answer that question by kind of first stating sort of the segment of the market we work in. And you mentioned smaller businesses. These are generally, again, not necessarily small in dollar volume, but small in terms of employee base, ownership involvement. Usually the owner is hands-on, the founder. Um, in that segment of the market, there will always be deals happening. Sellers need to retire. Individuals want to buy businesses to get into business for themselves. There's always, regardless of economy, there's always deals happening. When you start to look upstream a little bit more into strategic acquisitions, corporate acquisitions, those can run a little more hot or cold based on market conditions. Companies can simply say at a board level, acquiring buyer companies might say, yes, we're acquiring this year, or no, we're not. And just like that, the market goes one way or the other. I'm starting to see some cooling there. I think the growth through acquisition model was really buzzworthy and exciting for a while amongst people or amongst corporations. And then maybe they're realizing a little bit now that it's just not as easy as it sounds.
Right.
Merging two companies, two cultures, all that, the work that goes into that, it's not as easy as just adding revenue and profits to your revenue and profits. So
Yeah, for sure.
combine that with a little bit of economic instability, I think that at that higher level, there might be some slowing in that segment of the market when you're talking about bolt-ons or corporate acquisitions and mergers. Of course,
Sure.
they'll always happen, but I think that might be a little slower than, say, again, just individuals selling businesses to individuals.
Sure. So let's talk about the industries that you think are going to be the most sought after. Yeah.
Good question, because people always want to know.
Yeah.
We are seeing a lot of activity in a few different segments, and I'll explain why. First would be healthcare, healthcare related,
Mhm.
specifically with aging population. So talk assisted living, home health care, businesses like that. Certainly demographically speaking, the demand is not going anywhere.
Mhm.
So we're seeing a lot of activity in those segments. Services as a general category, whether it's B2B or B2C, people love service businesses because you can buy very profitable companies at relatively lower price points due to just lower capital and equipment expenses. You're providing services, you're profitable, and so people like those. From a numbers perspective, we always do well selling service businesses, whether you're talking about heating and air companies or you
Mm.
name it. So we always do well there. Kind of the other side of that coin, we always do well with manufacturing companies. Now, certainly in the last year or two with tariffs and employee markets and things like that, manufacturing companies have had to adapt and adjust, but they're doing that. They're figuring out the new way to do business. And the underlying core to that, though, is that people love the idea of producing a thing, making something and selling it. So we always do well with those types of companies, and they like the idea of owning tangible assets. So you have to pay for that a little differently than, say, a service company, but people like manufacturing. They like machines, they like making a thing. And so we always do well with those types of companies. So those are kind of three areas that we see a lot of activity in.
Awesome.
Yeah.
Let's talk real quick about your process and how Calhoun Companies works with sellers, because I think
Mm-hmm.
that would be good for our listeners to know. I'm going to follow that with our last question, which has to do with advisors and how they can collaborate with you. But first, let's start with that process.
It's a great question. So at Calhoun Companies, we are a transactional firm. So we work with business owners when they're ready to go to market. We will get their business sold for them. We're not long-term consultants. We're not the partner on the team that helps them 5 years out to, on a monthly basis, prepare to sell. We're there for when they want to sell. That's our role in the process. Now, that said, we're always happy and more than willing to connect with sellers as soon as they are interested in learning more about what that looks like. Again, whether it's 1 year, 5 years, or more from the actual sale date.
Sure.
I always say Calhoun Companies, we were founded in 1908. We've been around for over 100 years, and we're going to be around for over 100 more. It's all about their timing, and when it's right, we'll be there for them. So with that said, If they have a few basic questions, if they're just curious about what their valuation would be today, we can do that, provide that to them, answer some questions, tell them about the sale process. And sometimes we do that and they leave the conversation going, this was great, very informative. I've probably got a few years. And we go, that's super. Let me connect you with some planners and some people who can help you in the next few years get ready, and then come back and we'll talk about hitting the market. So that's really kind of how we work. And then I can, maybe a conversation for another day, talk about the selling process of how that all works. But that's kind of the high level. Is we're there when they're ready to sell, but we're more than happy to always talk and educate about the selling process so that they're ready and prepared when the time is right for them.
Well, and you and I both know that for the majority of those business owners who are selling, it's the only time they've ever done it, and it probably will be the last time. But not
Correct.
everyone, right? But many, right?
And most, yes.
Yeah, and if it's something that you've never done before, you definitely don't want to DIY.
Correct.
Um,
And you don't want to just fly into it on a whim,
yeah,
which unfortunately, you ask about how many people are prepared. Unfortunately, most aren't prepared in a traditional, well thought out sense. Most sales still to this day are driven and motivated by non-business factors, if that makes sense. Things like,
yes,
health issues or family issues or simply burnout. A lot of things that are not, in a long-term view, you can say it's predictable, but on a month-to-month, year-to-year, you don't necessarily know when those are going to hit.
yeah,
Unfortunately, a lot of business owners come to us when it hits
right.
and they say, for better or for worse, I need to sell now. Let's do it. And we do. And we
Mhm.
try and get them the best outcome we can based on the current state of their business. But boy, if you could even just have 1 year or even 6 months of getting things in line, you can really change your trajectory for success.
Yeah, definitely. I would underline that all day. So, one last question for you, Andy. A lot of advisors listen to the show, business owners too, but advisors who work with business owners. And I would just like to hear from you, and they would like to hear what are what are the tips, or what kind of advice do you have for an advisor who has business owner clients in their database? Are there things that they can do to help move the needle with getting the process going?
It's a great question. And I think first and foremost, I'd say be gentle. Be gentle with them. People don't like to talk about their exit, but they need to. Uh,
Mhm.
I sometimes joke that it's sort of like writing a will. We all need a will.
Yeah.
Nobody wants to talk about what's life going to be like when I'm gone, but in that example, for the sake of your family, you need to do it. Very
Yes.
similar with a business, I would say, is that people don't want to talk about their exit. It's their business, is their identity, it's who they are, it's what they've done with their life. They don't want to think about oftentimes life afterwards, but they need to. And so that would be my highest level advice is, and I'm sure a lot of your listeners get that, but that need to just be gentle. It's
I like
counseling.
that.
We're in the counseling business more than anything, is what we say.
Yes.
We're there to walk through it. But with that in mind, it's never too early to start bringing it up and start taking some baby steps toward that exit. Make it less scary. Doesn't need to be scary, and just open it up for discussion. It just needs to be on the table.
Yeah, I agree. I think that the more one actually talks about it and talks it through, kind of like thinking out loud, the more comfortable they are to continue the conversation and expand, what's possible versus internalizing it. So
Right.
maybe that would be my tidbit for people listening. Just start talking about it and looking at what could be possible. And instead of looking at it through the lens of doom and gloom, like, oh my gosh, I'm going to be done and what am I going to do with my life? This really could be, should be the best, absolute best part of your life.
And I think sometimes there's a stigma attached to it as well. Of, if I'm exiting my business, does that mean I failed, or that I'm somehow
Mhm.
no longer capable or less than I was 10 years ago? And it doesn't have to be that either. Everybody exits at some point. So you might as well make the best situation you can. And
Yeah,
that comes through preparing and engaging with experts. And like you said, you generally do it once, so try and do it the best you can.
that's right. Well,
Yeah,
thank you. Really appreciate having you on the show, Andy.
absolutely.
Always so much
Pleasure to
more that
be
we can
here.
talk about. Yeah.
Yeah.
Well, we'll continue this conversation again sometime in the year. We've already talked about different topics that we'd like to cover. So, again,
Hmm.
big thank you to you and a big thank you to our listeners and our sponsors across the US and the globe. You guys make this show possible. We are grateful for you and grateful for our 26 sponsors, including Calhoun Companies. And we'll see you again next time.